Welcome back to the latest edition of LUMA's Market Report. I'm Connor McKenna, a partner at LUMA, and today we're going to dig into what's frankly a pretty strange market environment. On one hand, you've got incredibly strong technology-based stocks that are sort of growing through the roof, and on the other hand, you have one of the slowest M&A markets we've had in over a decade. Before we get into that, be sure to click the link in the description or go to our website, lumapartners.com, to download our full report that has all of the data on M&A and public markets across ad tech, martech, and digital content. Let's get into it. As we entered the year, the general sentiment in the technology sector was that 23 would be a year for moderate opportunity. You had growing interest rates, concern around inflation, and so the whole sector was focused less on growth at all costs and big opportunities in technology and more focused on driving efficiency to the platforms they had. That's why we saw a ton of layoffs at the end of 2022 and continued focus on moderate growth throughout this year. And the expectation was that that would continue into the public markets and the M&A markets throughout this time frame as we started to get more clarity on interest rates, inflation, and pending recession. But that's not where we are halfway through this year. Instead, we actually have an incredibly strong public markets with the NASDAQ 100 up over 30%, largely driven by the newly monikered Magnificent Seven, Alphabet, Amazon, Meta, Tesla, Nvidia, Microsoft, and Netflix that are collectively up over 50% this year. This growth has also driven into our sectors in ad tech and martech, with ad tech companies collectively up over 25% this year and martech up over 16% this year. While efficiency is still important, there is more and more excitement about some of the growing opportunities around AI and other technology tailwinds, while we're also seeing less concerns around some of the inflation, interest rates leveling out, and the opportunity for potential soft landing. And yet no one seems to tell the M&A markets. In M&A, unlike the public sector, we've had one of the slowest first halves we've had in over a decade, maybe discounting the craziness around COVID in 2020. So what's going on here? Well, a lot of the factors that drove down value in 22 are now in the rear view. Concerns around inflation and rising interest rates and potential recession have largely subsided, and a lot of these technology platforms have already made the efficiencies that they needed to through 2022. Therefore, the companies and their investors can now start to focus on these massive tailwind opportunities. And the same is very true in ad tech and martech. We just came off Cannes 2 weeks ago, and the talk was not around operating margins and layoffs. Instead, the conversations were around the huge opportunities around AI and creative, data and identity, CTV, and commerce media. These are all massive tailwind opportunities that companies are looking to get behind. So now as we move forward and think about M&A, there's two fundamental aspects that we think will start to drive some more M&A activity in the sector. One, those tailwinds aren't going anywhere. In fact, they're only getting larger. And two, many companies in this space have focused on this efficiency and are still being judged on how they're driving profitable growth in their businesses. So for those with cash, they're going to need to make the decision of whether they invest off their P&L and dilute some of their margins in order to build products, or for those that can actually invest off their balance sheet and get ahead of some of these tailwinds. The big question is, who will lean into this and who will not? So that's it for me. As a reminder, please click the link in the description or go to our website, lumapartners.com, to download our full market report with all of the data on M&A and public market activity in ad tech, martech, and digital content. I'm Connor McKenna, signing off.